Hi, Harry here with the Rant on November 14th. I thought I'd take a step back. We're finally seeing, what could be, the beginning of a real crash. Something that now has been put off literally for 5 to 6 years minimum. This second crash to follow the 2007 to 9 crash, which was limited. That one should have gone another year approximately and deeper well into 2010. But there should have been a second crash in the next decennial cycle where corrections and recessions are most likely. And most important, at the bottom of the Generation X slowdown in spending to follow the magnificent, huge baby boom, largest generation of all history. So that should have occurred, that this second crash and deeper recession are really more like a depression, should have occurred from, say, late 2019 into late 2022, okay? But this 29 trillion, and I've gone over that ad lib, so I don't need to talk about that too much, okay? $29 trillion and still growing at $2 trillion a year fiscally in stimulus since 2008 to 9 downturn has created a second 100% artificial bubble, okay? Now, what's most important to understand about this is that new technologies, major new technologies like automobiles and electricity, and telephones and electrical appliances. I mean, this was huge. We didn't have all this stuff, before the early 1900s. And it wasn't mainstream until beginning in the Roaring 20s and not really mainstream until the 50s and 60s. That's how our economy works. It takes 2 generation cycles, one to move it first in the mainstream, the second one to move it fully mainstream. So this happens over 80, 90-year cycles. And of course, the most important cycle has been and continues to be the 90-year cycle, which caused the 2 Great Depressions of the past, 1836 to 42 and 1929 or 30 into 32, 33, which really lasted all the way into 1942. Okay, so it's important to get that new technologies, new growth areas, this is how they emerge. They emerge in bubbles. That's the only time we see bubbles. We didn't see bubbles in the 1950s and 60s boom, okay? That was the maturity boom, not the growth boom like the early 1900s, Roaring 20s. So what we have today is 2 major new growth arenas emerging, and there may be something else coming we haven't seen yet. The first one's been around a while, Bitcoin as the leader and symbol for cryptocurrency. And again, why is this important? I didn't fully get this at first. I had to really dig in. All I knew was that Bitcoin and cryptocurrencies were acting like the last revolution, which was the digital marketers and .com and internet bubble of the late 90s. It was acting like that, so it had to be the next big thing. And then I look at it and say, oh, this is really, Bitcoin is ultimately the base, is going to be the gold of the future, digital gold, as people are starting to call it rightfully, for a global economy, so it can be an objective value point for money. And the economy needs that. It has to be objective. US dollars, not that. Gold no longer correlates with the material economy. People keep saying, what are you talking about, Harry, about this material stuff in the newsletter? I am mentioning that. There's the material economy was for most of history, okay? We're mainly getting houses and cars and, railroads and appliance, tangible hardcore stuff. Well, now most of our economy, 60, 70% of it is services. And I talked about, intangible services versus material services. Transportation, a service, but no, hey, it's trucks and cars and trains and stuff, and airplanes, okay? It's still tangible, okay? Financial services, okay? And entertainment and a lot of these other arenas, they are intangible, okay? And that's the future. So we've got Bitcoin and the whole cryptocurrency arena. That's been emerging rapidly since about 2012. Now, the second one we're seeing more recently, AI, okay? And again, people keep saying, Harry, didn't you see AI coming? I said, Look, that was the whole topic of my best-selling book of all time, which was The Roaring 2000s, which came out in March of 1998, right smack in the middle of that first bubble, okay, when the internet and dot-coms were emerging mainstream. Again, only happens in bubbles, okay? So my whole thesis was the biggest thing that's going to happen, the biggest productivity in history is not just technologies that make things work better and give us new products and tools and all this sort of stuff. It's changing organizations. You know, the General Motors new top-down, decentralized front lines, centralized back line. That was a huge thing in history, okay? Well, I've been talking about since the Roaring 2000s book, the network corporation. Frontline browsers organized around narrow groups of specialized customers so they can precisely meet their needs and be very fast, okay? And everything you can't put in those frontline teams, backline servers. That's the new corporation. It's more circle than top down, okay? So this is what's happening. And so AI to me is that, okay? AI is finally something that's no longer a niche thing. It is moving mainstream. It's the hottest topic in the stock market now. And of course, what do we see around it? Bubbles, okay? So you know, internet was the theme of the first bubble. AI is more the theme of the second bubble, okay? And when I look at automation, I mean, people look at the type of sectors or stuff or things or technology stuff. I look at the type of work, okay? We used to be well over 50% people involved directly in farming, okay? That's been a big topic of the newsletters recently, okay? Well, that got eliminated and is down to less than 2% today and produce not only everything we can eat, but we export like crazy. Well, okay, what comes? Factory workers. They became about 50% of our workforce, okay, or indirectly or directly. And now that's gone down to like 8 to 11% by different measures, and we'll keep going down, okay? So now what I say, but what really is the transformation here is these frontline individuals or teams, either way, whatever it takes, frontline browsers and backline servers. These are small businesses either on their own serving larger businesses or within a large business focused on the front line backed up by the backline servers, the browsers and servers, okay? So this is a new model. People don't quite see this yet, but it'll become more obvious. And again, networks have got to be what comes out of this information revolution, okay? So again, assembly line, what was the powerhouse, okay, in 1914 to 29 that created the greatest bubble in history at that point, and through these things mainstream. And again, they didn't go fully mainstream till the 50s and 60s, but first went out in cities particularly mainstream then, okay? So now we have, you know, the same thing with these two bubbles, Internet 1 and Crypto 2. So this bubble is going to cause prosperity and stuff well into the 2037 is the peak of the millennials before they plateau for a long time. But for the world, the next great boom is going to be from 2028 after a crash here likely into around 2050 to 55. That is when India will look like China today and be mostly urban and even more productive than China back then. China will be fading by then, okay? So that's the era we're in, but you have to expect bubbles always crash. That's the thing, okay? People always act like, well, this is a new era. We don't have to have recessions now because these new technologies are so good. No, these new technologies are going to go through a race for leadership. And I mean, auto companies went from 100 down to really 3 by the early 30s, from the early 1900s to the early 30s, and just say 2 decades, especially from 1914 to 29 when the assembly line catapulted them. And then had a big shakeout. Well, we're overdue now for a shakeout. And again, all we can do, I mean, after it's been put off for 5 to 6 years, okay, why couldn't they put it off for another year or two? Yes, that's possible, but I'm seeing cracks now. This is looking like a peak, so there's a high chance. I can no longer be as certain as I used to be. My timing stuff used to be really good until governments decided to run over cycles, you know. These natural cycles that have made us rich, okay? So that's what we're looking at. The most likely scenario here is we're just at the beginning of a shakeout and a bubble crash, okay? crypto and AI bubble, okay, that crashes, okay, and brings these down to reality and creates the leaders of the future for decades to come, like General Motors, Ford, and Chrysler, and companies like that, and Westinghouse and General Electric back in the 29 to 32 bus. So we still haven't had that. Can we go without it? Well, if we do go without it, my research says very clearly we're going to compromise the long-term productivity, because the economy knows what it's doing. It's been around a lot longer than us, and free market capitalism has outbeat every other system 10 to 1 or something like that, okay? So we shouldn't be second guessing this system. This system needs to flush out the losers from this race and really make the winners that much stronger. So everything they're doing, all these new AI and crypto and things and all, can become mass affordable and raise everybody's standard of living. So that's what's happening. We're due for a crash. It looks like it's happening. But we need follow through in this. Remember, my research is also showing, and nobody else has done this that I've seen, every bubble, back to the beginning of the stock markets, okay? Every bubble, and the first crash averages 42% in 2.3 months, okay? 2.3 months, that's the really shocking thing. When a bubble finally crashes, it tends to crash hard. So if this was a top on say October 29th, it looks like to me, for the key stock indices and stuff, then we should see a crash into say January, at least into the end of the year, but probably into January, that is strong and hard and clearly says, okay, now we know where we are in the cycle. They may have put it off 5 or 6 years, but it's happening now. We're going to get this shakeout, and it's going to lead to the last great, I call it the last great boom in America, from early 2028 or so into late 2037, before our demographics go only down for a long time. So that's a lot today, but think about this stuff. It's an important time in history. The economy and the markets need to win here. We need to throw out the central banks and the governments that say, well, we'll just print our way to prosperity. That's not something that creates productivity. The whole shakeout of let 1,000 flowers bloom and then bring it back down to the real winners, that's the type of stuff, as painful as it is at a point, that creates long-term productivity, as we've seen out through our history. And again, I remind people, and I've studied history more than anybody I know, and I mean back to the beginning of time when necessary, okay? That basically this is how it works, okay? You have to have challenge, not just nurture. You have to have these shakeouts to make the system strong, and we've been avoiding this for 6 years. And after this happens, we will have a clearer economy and the last great investment opportunity of a lot of our lifetimes to catch this last great boom in America. And of course, India, don't even talk about it. That's the next China. We'll get into that and more in the future, and as I already have. That's what we'll see next. And so just be safe now. It is a good time to be out of stocks and risk assets into these treasury bonds. But again, I keep getting questions. I keep reminding people, if you're more on the aggressive side of investor, being short the stock market, the biggest hit to financial assets comes in stocks in the first couple of months, as I just said, up to 40 to 50% in 2 to 4 months. That's what you got to catch here. And it's best to just be simple short stocks. If you're going to buy SQQQ, which I love because it's the NASDAQ, the sexiest one, it's triple, okay? You don't want to be triple short unless you're really a trader and really high risk. You just buy a third of that, and now you're one time short the NASDAQ, the QQQ, the NASDAQ 100. And that's a great place to start. Once that happens, then the bonds, the TLT and Zeros and ETFs like that look more attractive. And that's when we can shift more to that. But right now, I'd say that. And if you're more conservative, just sit it out in TLT. That will benefit from a slowdown, and it will explode at the best. But you may wait 2 years before you see the real rewards from TLT. If this is the crash, I think it is starting, and we'll know that soon, we should see the biggest rewards, short stocks, in the next 2 to 4 months.